Mike Briggs is our market analyst this week. Live cattle future prices dropped in the market over the past few days. According to Mike, the reasoning for this price drop could be due to a possibility of an overabundance of market-ready cattle during the months of May and June. Mike calls this overabundance a cattle tsunami. However, since May and June are prime months for demand, and currently there is a short supply of market-ready cattle, this tsunami of cattle could benefit the market. We met with Mike Wednesday morning and talked to him about cattle inventory, beef demand, and how cattle supplies could be impacted by the Argentine drought.
Live cattle futures have been operating primarily on what they believe the future is going to be, i.e. the futures market. There is a perceived belief that come May and June there's going to be a cattle tsunami of market-ready cattle. That may or may not be true. That's what we thought was going to happen last fall, and it never really did appear. But it does kind of seem like we're going to have a pretty good supply of fat cattle going into May and June. Now, how much concern does there need to be? That's also your best demand time of the year, so I don't know how whooped up everybody needs to be, but the funds that trade the board and the people that trade the board, that's what they're looking at, is that particular situation, and they're paying very little attention to what's going on right now, which is pretty short supply of fat, market-ready cattle.
Demand and supply also impact the futures prices. However, Mike is still more concerned about the possibility of an overabundance of cattle.
Yeah, it's basically demand and supply situation. What I'm talking about is a perceived overabundance of cattle in the future, and I think now is a time that as cattle feeders, if we can be a little tight-fisted with our present fat cattle, the packers making a lot of money, demand is really good, so they've got the money they could share. We just need to be a little bit tougher fisted and force this thing up, because I think we can. I think we're sitting in a pretty good situation here for the next 45 days.
We also asked Mike if adding tariffs to steel and aluminum would affect U.S. beef exports.
Yeah, there's some talk about what our president might do about steel and aluminum tariffs. Does that really affect us? No. But typically, a lot of times, if some other country wants to retaliate, that's the first thing they do is slam agricultural products, which would be really disappointing. You know, the dollar is down. The value to that exporter is really good as far as beef exports. I think beef exports are going to continue, and I think demand is in a really good spot right now.
In addition to tariffs, we asked if the Argentine drought would eventually have an impact on cattle feed prices.
You know, the drought in Argentina has got a lot of different opinions. Yeah, it's a really bad drought. They're getting really slammed, but there's people that think for every bushel they lose, Brazil has gained it. I don't know if that's true, but it is pressuring proteins, especially bean meal. So when bean meal gets high, people start switching over to distiller's grain. That started to go up, which puts pressure on our margins because our feed costs are going to go up. Do I think it's going to be anything substantial? Maybe not at this time, but I don't see it as a problem that's going to go away, because if you look at the long-term forecast, I think we're going to have a dry spring here, and that's going to make everybody nervous, which could quite possibly chase things a little bit higher. They're talking like this weather might not change precipitously until June. Well, if it's a dry spring, you're going to see people get really nervous.
Then there are cash prices. According to Mike, he's a bit bullish about this topic.
Well, it's like we talked a little bit earlier. I think I'm bullish cash prices. I'm talking my position a little bit, but I'm bullish cash prices. But I think we as producers are going to have to try to hold the packer's feet to the fire a little bit. He's got lots of margin. He could share a little bit, but obviously he's not going to unless we force him. I think demand is good enough. And like I said earlier, I know there's this perceived tsunami of cattle coming to the market later on. Maybe there is, maybe there isn't. But I think we can force this price higher here in the short term for a little bit. Then, yeah, we may struggle a little bit in May and June, but if the market gets good enough now that we can pull some supply forward, that lessens the impact of that going forward. So I think cash here, I'm bullish. I'm pretty bullish markets here for the next 30, 45 days. Then I think we may struggle a little bit. Now, having said that, you go on further, like say into the fall, you've seen a lot, and what this tsunami of cattle is coming from is a lot of cattle have been sent to feed yards early because of the drought, and there's not much wheat for these cattle to graze on. So those cattle have already come to the feed yard. So then the market's going to be faced with, well, typically those cattle are placed in April and May. Well, now you're going to have probably a decrease in placements in those months. Therefore, you're going to have a shortage of market-ready cattle, probably Nov Dece, kind of in that fourth quarter. So I think there's some things going through. It's kind of like we're going to go through kind of a little struggle period, and then I think this thing can rally back and be pretty good in the fall, because I don't think there's going to be a lot of cattle in the fall.